everyone, it is Evan here from the Trade Risk on Friday, March 15th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to kick things off with our market technicals dashboard. This is usually where we start. And as a reminder, this is a free public available page to you. If you go to the traderisk.com/market-technicals, I don't have any links up on the site for it, so you have to go to it directly. You can just bookmark it. But if you like the format here, if you like the kind of display of just the general market performance, you can bookmark that page and get to this yourself anytime you'd like. Usually updates about an hour, within the hour after the market closes. You can look at this timestamp right here. So if we look here at the performance for this week, the 5-day change, you can see we're just nice and strongly green right across the board. You know, the market did start to pull back last week. We had our first real sort of down week in the market for 2019, and we got absolutely zero follow through. We got just the total inverse happen, buyers step up, and we kind of launched to new highs in some of these major indices, led by the NASDAQ. The Qs here up over 4%. A little bit of lagging action out of the IWM and Dow this week, but still overall some good rotation, some good gains. And you can see we are basically reclaimed all of our key moving averages across the major indices. If we look here at sector performance, you can see we got good risk appetite at the top. We got semiconductors, biotech, and technology. And on the downside, we have industrials. You can thank Boeing for that. XLU, which is utilities, and the material XLB sector ETF as well. When we look at some of the major markets for the top performers, we have oil, we have China, and we have emerging markets. Again, a nice kind of spread of risk assets there. And on the downside, we have just a continued unwind here in volatility. I guess continued, maybe not the right word, because it did pop last week, but you could see that pop basically came right out of the market this week. So if we jump into the charts now, that we have kind of a pulse on what's going on here. And actually, I should say as a reminder, the popular sort of SPY ETF, the SPY ETF that tracks the S&P 500 did go ex-dividend on Friday. So again, when you're kind of comparing when you're doing your technical analysis this weekend and you're looking at, say, the S&P 500, this is the cash market here. Take a look at where we closed Friday, fresh new highs on the year. If we were to take a look at the SPY ETF, you can see this looks a little more pessimistic here. It doesn't look like we broke out. This looks like, you know, resistance continuing to hold in here. And that sort of isn't the case. It is very, you know, it's relatively slim. It's not like we broke out by a lot, but the SPY ETF is skewed to the downside a little over $1 because of that dividend. So just keep that in mind. So let's go back to the weekly chart. We'll look at the weekly S&P here, and you can see we did close at new year-to-date highs here on the week and on a weekly chart and on a daily chart. So we saw some nice progress here by the bulls, and we're getting back above that key psychological 2,800 level in the S&P 500. Now, we're still not, you know, ways away from it. It's still in the realm of noise here, so we could just reject entirely next week and come back down and kind of develop in a trading range. Anything is possible, but as it stands, just taking what we've seen happen here this week and really over the course of this year, this uptrend remains intact, and we're seeing buyers step in, you know, almost exactly where you'd want to see them step in. Very shallow pullbacks, they're being bought up, and you're really just seeing this flurry of money, you know, from the sidelines that are having to sort of chase and bid this market up and continue to keep up with sort of the buyer's appetite here in the S&P 500. The MACD continues at new highs here. We're breaking above 2,800. The next key level that I'm looking at is about 2,872. That was the approximate highs in January of 2018, and it's sort of where we saw a little bit of a breakdown back in October of last year as well. So we've got some room here for key levels that I'm paying attention to. You know, it's another, you know, 2 or 3%, 2% or so to the upside. So keep that in mind as a next level. And then of course we have the all-time highs just over 29 25.40 in the S&P 500. Let's see, is that right? 25.39. Yeah, I didn't think we got over 29.40. Yeah, we did. 29.40.91. Those are the all-time highs made back in the fall time of 2018. So weekly chart, it's extended. It's been extended for a while. It is tough to chase, of course, but the rally continues on. Really tough to fight. No follow through from last week's candle, and we're getting new highs here in the S&P 500 on the year. So let's go down to the daily chart. We will go, actually now we're going to stay on the S&P 500 this week because of the ex-dividend skew there. And we're just going to look at a couple of these levels here. So 2,800, I believe, you know, that's more or less, if we were to look at the SPY, it comes in right around this 281 area is where resistance is where that key kind of psychological resistance has been. And we are starting to break above it. It was a nice strong close this week. And it was really, you know, Monday's session. It was how we came into the week, really ripping back to the upside here. That's what gave us, you know, kind of the confidence and momentum and set the path higher for the rest of the week. And the good part is, you know, even if you are bearish on the market or if you don't really, you know, want to jump in on the bull side here, the good thing about pullbacks that, you know, do end, so to speak. You know, the pullback we saw last week, we saw buyers step in right around that 27.40 area. That's a new kind of upper level line in the sand that everyone can start to use and look at. So if you're bullish here, if you're looking at kind of tight stops, near-term pivot levels, the lows from last Friday, that's kind of the key line in the sand for you going forward. And on the short side, I mean, you could make a statement now, the same statement we made last week where we said, look, you know, you could probably draw some argument here saying you probably don't want to be aggressively long this market until we're closing back over 2,800, and that didn't last long. It took only 5 days, and now we're closing above 2,800. Well, you could make kind of the opposite case now where, look, we want to see where these buyers just stepped up here last Friday around 27.40 or so. Until we're back below that, until we're starting to break some actual meaningful support, maybe you don't want to be aggressively short. And again, these are just broad statements. They totally depend on your time frame and your strategy, and everyone needs to interpret that differently. But it's sort of just a framework to think about price action when you look at charts like this using, just general price action analysis. So S&P 500, the way I look at it, 2,800, that's where we want to stay above now going forward next week. And the next big level I'm looking at, 2872 on the upside. If we go to the IWM next, this here is now, a little bit of a thorn. It's again, not the end of the world. We put up some great gains this week, but the IWM is lagging here. It's just a notable lag in the short term. The IWM, it's relevant because the IWM has been sort of the leader for the past several months here, probably more than that, in fact, 6 months really, on the direction of the market, and the IWM has tend to get it right ahead of time before the rest of the markets catch up. But the IWM here, if you look at a weekly chart, see nowhere near kind of breaking out above last week's highs. We did not reclaim it. We're very much kind of in the 40-50% retracement of last week's pullback. So it'll be interesting to see how this develops here. Is it just some rotation, and we're seeing rotation back into kind of FANG names and the Qs, really the high-tech mega caps? That's what we really saw took place this week. It's just a good rotational effort back into those plays. So healthy rotation amongst an uptrend is natural in bull trends. Is this something, is it that, or is this going to be kind of the canary here that ends up rolling over, making a second leg lower and puts the more, broad market at risk? That's what we're going to need to pay attention to. For now, it is still, trying to claw back some of these gains here. It's not the end of the world. Remember, this pullback is still very shallow in nature, just 5% after a tremendous, 25-26% run off of the lows. So let's make sure we keep things in context. But again, we have that pivot to use. Last Friday's lows right around 150 or so. Good line in the sand to pay attention kind of going forward. NASDAQ 100, this is now the bright spot here. The NASDAQ 100 and the composite both kind of breaking to new year-to-date highs here with authority in the Qs here, very much leaving in the dust last week's highs and launching above this, 175 level that had been resistance. We talked about Qs kind of stalling out, going sideways a little bit in here through February, a little more sluggish than the rest, but we're really seeing that kind of pick up now and playing catch up, so to speak, to the upside. Some good volume came in in. We had a trade in this as of our video Tuesday we talked about after Monday's session. That's what got us involved in the trade, and we ended up selling the rest of it towards the end of the day here on Friday. We were playing it via TQQ. We still have other exposure on, but this was just a quick tactical trade for us that we locked in some gains and are no longer in the position. Still like the NASDAQ here. It's of course tough to chase. It's had a good run, so you got to remember that. It's kind of coming into resistance here around this 179 level, but really, if we can start to get above 179, 180, the next, big level are the prior all-time highs up here around 187 back in fall of 2018. So that is the market environment overall. I think I hit on all the points. Oh yeah, let's take a look at that VIX. Let's see where that's trading here into the end of the week. Yeah, back to a 12 handle, so 12.9, lowest that we've seen in this trend here all year. So pretty remarkable unwind there. Some people might speak of that as being complacent in the market. We'll see, but a low VIX does lead to trending, low volatility trending environments, and it's very much what we are at least seeing at this time. So that is the broad market. Let's take a look at some of the major assets here. Go to TLT next, which is telling an interesting story. This is another piece of the puzzle here that we want to keep a close eye on, but we saw a nice rip to the upside in equities, and of course it doesn't have to be inversely correlated all the time, but we're seeing actually bonds here hold up and just remain resilient up here, really kind of hold a bid even in the face of a charging higher equity market, and that's interesting. So if we look at the daily chart here, you can see we're just still hovering underneath this resistance, 122.50. It's been resistance for over a year. It's something to pay attention to. I like the potential here. It's gone sideways now for just about 4 or so months, 3 months or so actually, and if we're really going to take an attack on this 122.50 again, I'm not sure that resistance is going to hold for such the nonstop kind of beating on this level. So got to pay close attention to it next week. This could be a breakout candidate. Again, sellers bears case might be looking at this saying something's fishy if we're going to get TLT breaking out to new highs. Maybe equity markets do have to come in here. Maybe the breakout this week and the exuberance is sort of a last ditch effort before the market rolls over. We'll see. We're always keeping an open mind, not trying to predict anything, but TLT I think is at an interesting spot to pay attention to for next week. If we go to oil next, you can see this had a very nice week this week, 4% to the upside, taking out, resolving the 3-week high, the 3-week tight consolidation. Was moving sideways for quite a while here. It's starting to break out now. This helps kind of fuel pick up equity markets as well when we have oil continuing to break out. So bulls very much in control there, looking good right now. If we go to natural gas, not quite the same story here. We did fall 2.35% this week, kind of pulling back into the breakout range, so to speak, of late February, right around this 24.50 level. We've been keeping our eye on it. It's hovering right around it, so really not making up its mind just yet, mostly sideways here. We'll see if we can get some more follow through and pick up in volume next week. Last but not least, if we go to metals, GLD here on the week was flat pretty much. It did try to pick up and make some moves earlier in the week, but we did end up coming back down into the end of the week and finishing just about flat here. Looks a little messy, higher low maybe trying to get put in, but there's still some more work to do. And silver here, kind of the same picture on the week, was down just slightly, I believe, 0.5%. So again, tried to push up, it failed, kind of came back down into last week's range. A little bit messy here over the past week or so, so we got to let the dust settle and let this pick a direction for both metals into next week. So that covers everything of the broad markets. Let's take a look now at some of the sectors. We'll look at the top performing and bottom performing sectors of the week. Number one was semiconductors. I mean, this came really ripping back here on Friday, breaking to new year-to-date highs. This here on the year now is about, let's see what this is, over 20, I mean, close to 30% up on the year. So just a very, very fast and sharp snapback for semiconductors. If we look at the weekly chart, chart here, we are very much back into all of this past prior supply in here. So we are working our way back to almost entirely trading out the breakdown back from October of last year in the semis, and the trend continues higher, MACD in positive territory. Once again, it's not easy to chase, but there are opportunities, especially in some of these individual names under the hood semis, really doing some work to the upside this week. IBB also back on the upside this week. You can see on its weekly chart coming back to the 115 or so resistance. That is where it failed last week. You know, it's had a 5% week to the upside, and it's still an inside week. That goes to show you how fast or how large the trading range was last week. So we got an inside week for IBB coming into resistance. Something to pay attention to there. It's one of the first to kind of break out and start repairing technical damage earlier this year. We'll see if it can be, making the second leg higher through some more resistance for the market next week. Last but not least, top three here is XLK is technology, and you can see this is also getting back above some prior influential sort of horizontal levels here, right around the 73 bucks in the XLK. Again, it's a tough chase, just some great strength and rotation this week with some good volume coming on above average 20-day volume. On the downside, we had XLI. XLI was the worst performer. It was down 0.34% on heavy volume. Take a look at all the sessions over the past week or so. Of course, we had the unfortunate Boeing news out there, so that was certainly weighing on the industrial ETF, which Boeing is a part of. Otherwise, a little pullback here, some technical damage, and a minor technical damage, but at least a break of this steep trend line that it was in place since the start of the year. We'll see if it gets any worse than that, but for now, sellers trying to take that a bit lower right now. XLU on the second worst performer of the week. It was up 1%. This is utilities, more of a defensive play, still trading at all-time highs. Hard to get mad at this. It's pretty much been in a very steep kind of channel, working itself higher here. Really don't see much different there for XLU for this week. And materials, this was the bottom three. This was the third worst performer this week, 1.13% to the upside. Really just dealing with some pretty classic technical resistance here. This $56 has been holding. It's kind of the bottom end of the big consolidation from 2018. We tried to break out in November there, tried to rally in early December, tried to rally in early February, and now tried again this week. Just fail, 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 fail. We'll keep an eye on it. 56, that's the action area. So don't lose sight of it. We're only 60 cents below it. Could happen next week if we start to break out and retest it once again. So that is it. That is what I have for the weekend video. Thank you so much, as always, for tuning in and watching. You can subscribe on our YouTube channel to stay up to date. Every Tuesday and Friday is when we do the market recap videos just like this, or just follow us on the TradeRisk, traderisk.com/blog. Keeps you up to date with all of the latest that we are publishing. Have a great weekend, and we'll talk to you next week.